Welcome back, friends. My name is Deepak. I'm here at Sanjeev Gupta CPA firm, and I have Sanjeev ji here with me. So we want to talk to you guys about something that all of us do, that is real estate
Oh,
investments.
definitely.
Right?
100%. That's everybody wants to own real
Yeah,
estate.
and I think what happened was during the downturn when things were just not going as good, a lot of people in the Indian community made a lot of investment.
Oh, definitely.
Right? Some people bought residential properties, some people bought
People transfer money to India to buy real
right,
estate.
and a lot of people own apartments in India these days, or land and other stuff going on. And then there are people who even professionally invested, such as in motels, hotels, and whatnot. And now with the new tax reform, there are a lot of questions comes as to what can they do this year to reduce their tax brackets, what can they do to reduce their taxable income. So I want to ask you in specific to these real estate people. And by the way, before I ask him the question, once again, I want to remind you guys is that we do have a webinar coming up where Sanjeev ji will be available to answer your questions. So if you are not planning on meeting the CPAs at all, at the bare minimum, please register for the webinar. It's free to you guys. A lot of time people will call our office and say, can I just ask that one question? So this is your opportunity where you can ask that one question directly to Sanjeev ji, and he will try to answer that. He's usually available for about 30 minutes after the webinar to answer the question. So plenty of time. So please definitely register for that. Just head on to sanjeevcpa.com and you can find a link to register. So Sanjeev ji, real estate professionals. Okay, and maybe perhaps even that's even a wrong word because a lot of people
Yes.
maybe they work but they own two or three properties, they don't consider
So,
themselves
real estate
professionals.
professional is a big word. by the
Right,
way.
right. So there are people who just maybe buy a property, and then there are people who even do it at a bigger scale.
Right.
What do you recommend for this year? How are things going to change for them this year?
Yes, according to the Tax Cut and Jobs Act, there is a lot of incentives for people who own real estate.
Oh, really? Okay.
Yes. The only thing, underlying thing is use the right word, the real estate professionals. You have to actively manage the real estate.
Okay.
If you actively manage, now the word is actively management. Now people do ask me what is actively management means. Active management means you have to put at least 750 hours
A year.
a year.
Okay.
And
So
should
roughly how
one third of your time.
No, what does it come to? Like in a monthly basis, so people
Monthly
kind of get.
maybe 30, 40 hours a week, a month.
Okay.
About that.
Okay, so roughly about 7 to 10 hours a week.
7 to
Okay,
10
so
hours.
1 day a week.
One day a week.
So if you can afford 1 day a week, focus on that. For the tax point of view, you're considered a professional.
Professional. So you have to maintain some kind of record also.
Okay.
To show that you are really engaged in that. Now, email is one area where you can send emails back and forth.
Okay.
You can, whenever you drive to that place, you can do a photo shoot of your driving to that
Okay,
place.
you're
and
going
coming
to a
back.
property, seeing stuff.
Seeing property.
You can have an office, I guess.
Office or putting some time into all that, like putting on a calendar, something on that. So that shows some interest. That shows that you're actually managing the real estate.
Let me ask you this. So let's just say you have a part-time employee who does 8 hours of phone calls for you, doing different things, but you only manage that employee, let's say, 1 hour.
So that management of employee is not considered as management.
So it has to be you personally doing
directly related to real estate, not managing the employee.
Okay.
So it should be direct management for the real estate. And definitely passing the real estate exams is also one area. Getting the real estate license is one area to overcome that requirement,
Okay.
but not enough. You still have to show
Not
that you're
substantial enough.
not substantial enough. So,
Okay.
so if you can do all those two things, or your spouse can do all those two things, you're so busy. Your spouse is staying at home, and if she can, by the way, passing the real estate exam is not difficult. Of course, it takes time.
Yeah.
It's not that easy, but if you can pass the exam, she can pass the exam, he or she can pass the exam, definitely. And you have a lot of properties. You can show he or she is managing that property. Any income from that property, net income, up to 20% is tax free.
Okay.
So again, that's a big advantage. People who are looking forward for building the real estate, managing the real estate, or trying to have a lot of assets in real estate, for them 20% is a big item.
So when you say it's completely tax-free, meaning there's no payroll, no corporate, no tax?
There will be no federal tax. It will be as a deduction. It will take your taxable income, lower your taxable income by 20%.
By 20% of whatever the net profit from that income is.
Yes, and you're paying tax on the remaining 80% of your taxable income. So 20% there's no tax.
Now, friends, and I could be wrong, Sanjeev ji can clarify. Now, this is on top of your deductions that you take anyway.
On top of deduction you take.
Right.
No, so net taxable income means you have rental income, then you have deductions from property taxes. By the way, the tax reforms, the Tax Cut and Jobs Act restrict the interest deduction up to a loan of amount of $750,000 for primary home. If it's a rental home, there's no limitation. So you can borrow as much as you can.
So that's very interesting. A lot of people were always focusing on primary. Maybe the market will switch now.
Naturally. So all people will start buying more into rental real estate and commercial buildings.
Right.
Because there's no restriction on property tax payment. There's no restriction on the mortgage interest payments. So rental income minus mortgage payments, interest payment, minus the property tax payment, minus the repairs, maintenance, whatnot, and then minus depreciation. If you have net taxable income, out of that net taxable income, 20% of that income you will be allowed as a deduction from a taxable income. So it means that you don't pay any taxes on the 20%.
Wow, you can't compete with
so
that.
80% you're paying tax basically on that income. So definitely that makes a lot of difference. So if you're actually managing it, now if you're not actually managing it, like a lot of people on W-2s, they buy real estate, then 20% is not allowed for that purpose. So definitely you have to do all those steps which we said, how to actually convert that from passive investment to active investment by putting those hours and getting the real estate license.
Yeah, so Sanjeev, I think we need to do a webinar about how to get busy.
How to get busy?
Right? Maybe we need to come up with a list of things, because I say that because many people who get into real estate, what they say is, hey, I want to get into real estate because it's easy. I don't have to do a lot of work. It just, and maybe it is, especially with Airbnb easy. And other things coming up.
It is easy, but you have to show interest in that management. Right. So if you can put those many hours, 40, 50 hours a month, not a week, then definitely it's a winner for you.
Yeah, maybe buy a property, let's say some vacation destination like Reno or Tahoe.
People do that. Or you can spend time going there with your family, just saying, oh, I will actually managing it. But of course, that hours is definitely.
Yeah, once a week, go there, come back, that's your 8 hours. All right. So what do you recommend? I mean, so for these people who have, let's say, maybe one or two real estate, I think we asked the same question in the last video. So you recommend for them to go with LLC route, right?
Yes, LLC is a protection. It does not save taxes, but it's more like a protection for any kind of creditors coming after your investment, after your personal assets, other than